May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the Euro USD. And I will tell you right now, it's not an easy read, but bear with me. All right. I'm going to divide this up into time frames and hopefully you'll be able to see my logic. All right. Am I bullish or bearish on the monthly? Are you bullish or bearish on the monthly? I'm bullish. Why? Simply because look at this low from 2000, 1985, right? Look at that. Look at the high. Look at the higher low. This is November 2000. Look at the higher high. The reason why there is a BOS there because there's a break of structure. Just like when we broke this high over here, this thing is not acting right whatsoever. Just like when we broke this high here, this was a bullish break of market structure when we made this high. This is the structure point that was broken. Here, this is the last one, the last break of market structure. All right, that makes us bullish over here. All right, the only time we turn bearish on the monthly time frame is when we break this low. And so far, this low has been protected. Yes, we made lower lows, lower highs, lower lows, lower highs, lower highs. We've been bearish for quite a long time since 2008. All right, and you can see it's been pretty consistent. Now, some people say, "Oh, but right here we broke, broke above." No, we didn't. No, we didn't. No, no. We are still above this high. Above this low and within this high. We are in this trading range. That means if we put a Fibonacci retracement tool on this from this low to this high, if I can just get it, I'll be all right. All right, here we go. Boom. And we stretch it over here. You can see that the market retraced all the way down to 786. 618, 705, 786. You can see it a little more clearly here. These are your optimal trade entry points. OTE. I should put it on OTE from the beginning. 618, 705, and 786. The market reached that 786, bounced off of it, and pushed up higher. All right. And this is telling me that we are in correction, still in correction. And until we break this high, all right, which is an internal high, until we break that high, this correction is not over. It is not over until we break this high here. All right. Once we break this high, it's going to look something like this, right? Boom. We break the high, and then we can start to think, hey, we are going to attack this high. All right, because this is a weak high, right? Why? Because it didn't make a new low. This is a strong low. Why? Because it made a new high. That's the only job highs and lows have. All right, and when they fail, they become liquidation targets. So this will be the buy side liquidity up here. Yes, all of these are going to act as buy side liquidity, especially on the lower time frames. All right, but what I'm trying to get inside of you, inside your heads, is structure dictates market. And we have a bullish break of market structure. Yes, we pulled back, but we pulled back into an OTE level. And could we expect the market to continue higher? Yes, we can have an expectation for that. All right. I am bullish on the monthly. Am I bullish on the weekly? Well, not so fast. Am I bullish on the weekly? Well, uh, that's that's a no for me. Why? Because you can see we've been making lower lows, lower highs, lower lows, and this is possibly the lower high for the next lower low. Until we break this high, I have to expect that we're probably going to attack this low. You understand? This was the last break of market structure from this high. This is an internal high. This is your actual high that led to the creation of this low. All right. It caused the last break of market structure. We have the pullback into correction territory, and this is probably 786 on the Fibonacci retracement tool. Sorry, let me get that out of here. So this pullback may result in the market continuing lower. I hope you can follow my logic. And and the deal is, the hesitation in my voice is the the monthly is showing bullish, the weekly is showing bearish. I don't like trading when the markets aren't in sync on the time frames. Let's look at the daily. Boom. Let's go to the daily. Why do I have this triangle here? All right, because the market is starting to show that higher lows. All right, on the daily, to include this one. All right, higher lows on the daily, and it looks like it may be an ascending triangle, which would, when you have an ascending triangle, right, start seeing that pattern, it's a continuation pattern. All right, it looks like it's leading for a bullish break. It looks like it. All right, that's some traditional, old school kind of what do you call it? Shapes and formations. What do you call it? Pattern trading. I'm not a pattern trader. All right, what I want to see is where the market is likely to go. Now we have liquidity points up here. See this clear out liquidity point here? All right, what did it clear out? Let's look over here to the left. Took out these relative equal highs right here. Right? If I can just get this thing to, there you go. These relative equal highs right here. We still have this one, which leads into a daily fair value. Now, this is old. This is very old. But I expect a reaction by the markets at this fair value gap here. Let me take a closer look at this. Come on, man. All right. And yeah, I would include this right here. This is an old one. It should act as a liquidity. A speed bump. What I mean by that is market will find it, tap into it, react, and then continue up higher. That's what happens more oftentimes than not. All right, and if we come all the way over here, we can see we got a bit of a distance to go get it, right? But I would expect that to be one of the liquidity targets. I do like this high here as a liquidity target. All right, so for some buy side liquidity. So I'm going to put a mark there as well. I think this will act as inducement to get the market to go up higher here, because this fair value gap is what it leads me to see is this low to this high, and that, my friends, is an order block. And I'm gonna mark this liquidity point out and swing it all the way over here, because I think we may be heading towards it before the market turns back down. I'm gonna go to the weekly to mark that fair value gap. You can see it clear as day here, right? Boom. This is a weekly fair value gap. All right. And I expect the market to probably use this high, this high as inducement to get the market to move up there, and then for a short term continuation for bullishness, and then we're going to probably turn down. All right. This clear out, this clear out here, this clear out wick is very interesting to me because if we take a closer look at it, you can see that it cleared out the buy side liquidity here. We had a pullback. The market pushed up higher here in an impulsive kind of way. We pulled back into this impulsive move for an OTE entry here, and the market continues up higher, strong with a small, tiny wick on top. Tiny. That means we're probably going to see some continuation up higher to at least this high and maybe to mitigate this high. These are two areas that I'll be looking for uh, the possibility that the markets may turn back around. Yeah, I would. Let's see. I'm going to mark this high here at, what is it? Come on, man. Come on, man. There you go. That is at 1.1918. All right. And I'm going to mark this. That's at 1.1972. All right. So that's what I'm looking for. I'm thinking, I'm going to look to see. I don't want to take buys here. I don't want to take buys here because it may pull back. It may pull back and test this area here because this looks like a mitigation. With this being the low, this looks like a mitigation block. All right, this is on the weekly. Remember that. So I'm looking for the market may pull back to that order block here. So it's a bullish order block here. If I can get the right one here. Thank you. All right. Looks like a bullish change in the state of delivery here. A bullish. If I can just get this thing, it's moving late. I don't know why. All right. There's a delay. So I'm looking for a short term pullback into this area. All right. We may see some consolidation here, and then a move like this here. We can come up to this. What do you call this? Buy side liquidity at this high, and then we can probably continue, it may continue higher and mitigate the speed bump that I pointed out. We may see a pullback and then a continuation up higher. We may see it, but I'm thinking that this may mark the area where the market continues back down. So this is what I'm looking at. I think we may see a turnaround here. Why? Simply because the market is finding itself at a trend line, and I'm not looking to take shorts and longs at trend lines. I'm marking out what do you call just structure, okay? And this is where we're at now, and it's very similar to where we find ourselves on the Dixie, on the U.S. dollar index, where I think the same way, just the opposite, the market is heading down into the wick out. I don't want it to continue lower than that wick. If we are to continue up higher in a bullish way, I think we're going to have a short term pullback into that low. All right, into that low, and then down further. All right, this wick is what's going to protect. I think that we may see some short term pullback and then lower prices. All right. If we go back to the euro, I'm looking just the opposite. We see the market have a short term pullback, and then we're going to see some higher prices. Where I think at the end of the week, hopefully, we'll see an area where we can take a higher a higher probability trade to the downside. All right. I hope that was enough. I'm sorry I drug that out. Make sure you go back and check out my video that I already put out for the US dollar index here. All right, go check that out and trade accordingly. Hey, I will see you in the next video. Make sure you hit the boost button and the like button. And the next video I'll put out is going to be the pound USD. That'll be next. And I'll see you in that video. May profits be upon you.